All right. I want to wait to see if a few people jump on first. Let me know if you guys can hear me. Okay, I got my lapel mic in, so you can hear me a little clearer. But I first wanted to go into how I got started investing. Man, I look a little shiny on here. Brother been getting my sip on tonight. But myself and a good friend of mine, Mitch, a long time ago, a couple years ago, when ING Direct was first out, we taught ourselves how to invest by buying penny stocks. So we went in, first, before we did that, we started to save our money in ING Direct. So we would go through every payday, put $10 in this account, through the direct deposit. So after a while, because it was automatic, we turned around and we both had somewhere around $800 in this account because we just let it go. And we didn't know anything about investing. So we started to invest in penny stocks, and penny stocks are stocks that literally cost a penny. So if you take a stock that's like 5 cents and you throw $10 on it, you get a lot of stock, basically. So that's what we did. And let me just make this disclaimer. I'm no investing guru. I'm no financial expert. I'm just going to share with you what worked for me. Because trust me, investing has saved my ass a few times. So that's what me and Mitch did. We invested in ING Direct and we started to save our money. Then we started buying penny stocks. So after I got good enough knowing what I was doing in regards to investing, I went over and got an account with E-Trade. Now, the thing with E-Trade has a lot of tools that teach you about what you're doing. They have videos, they have articles, and then they have physical facilities to where you can go in and talk to somebody, because there's a lot of stuff that I still don't understand. Like, so what I do with my E-Trade account, most of my long-term bills get paid out of there. So my insurance, my life insurance bill gets paid out of there. And a couple other bills get paid out of there. So whatever's left over, I just go in and I start choosing stock to purchase. And, it varies. There's a few of them. Let me see. Cause I think what sparked all of this was a post that I put up about Snapchat stocks. So recently I just purchased a bunch of Snapchat stocks, and I was late jumping on the bandwagon, but I was always not infuriated, but I'm just like, why is everybody taking these pictures with these dumbass filters? But I knew it was something that my daughter was into, or my goddaughters, and they're very young. Well, my daughter is 22, but my goddaughters, they're very young. They're like 9, 14, things like that. And they were into Snapchat. So normally one of the rules of thumb is you invest in your interests. If you can key in on what's hot right now, it's a smart move to invest in it. So I bought those stock. I want to say I bought Snapchat stock, and it might have been $13 at the time. I can't see my post, but right now, well, it peaked about $20. So how investing works is, again, one of the rules of thumb is you buy low, sell high. So you buy it at its lowest point, and then you hold on to it. So when it jumps and it skyrocket, you sell it and you get everything that's in the middle, because you paid, this basic hustling. You paid $13 for something. Now it's worth $20, $25. You can pretty much cash out, or you can pretty much ride the wave to see where that's going. So, and then recently I've done that, like Twitter stock is $32.11 a share right now. Okay. So now Facebook stock. Now, let me tell you, when Facebook first went public, I bought a bunch of stock. I bought three stocks of Facebook, and it was $28. $28 a share when they first went public. The first day they went public and they offered it so you can buy into it, I got 3. And then I slowly started to get more. So the big jump, then it jumped up in a week like $57 a share. Right now, as of today, is $178.99 a share for Facebook stock. They started off at $28 a share, but to buy stock now, if you don't have any, is $178.99. And that's just the offering. So I jumped on a lot of social media stock, like, again, Twitter, $32.11. Facebook is $178 a share. And then I started to do, I just started to get into medical marijuana, companies, because their stock right now, is $1.99, 42 cents. And they're all doing horrible. So if you could go in and buy up with money that you don't really count on, you know what I mean? Like, for those people who smoke or have a habit, skip a pack of cigarettes. And I think cigarettes might cost like $10 or something like that. Throw a 10 aside. You could have bought up $10 worth, you know what I mean? Of that stock for 42 cents. Now, you know, medical marijuana, the more places that are legalized in marijuana outside of Nevada, Colorado, and a few other places, that stock is just going to go up. You know what I mean? So, I started to buy a bunch of medical marijuana companies, and they're doing crappy right now. But again, you know, it's money that, you know, I would have spent on fast food or something like that. So I'll just hold on to it to see what it's going to do. So, I just want to get into, answering, just a few questions. Well, no, I'm going to answer the questions that I got in my inbox. Oh, okay. What's up, Mitch? Okay. So that's Mitch that I was talking about. Him and I did the, ING Direct, a few years ago, and we started to, and start learning how to invest together. So a lot of people want to know what a mutual fund is. Somebody asked me, they want to know what a mutual fund is. And a mutual fund is a mutual investment program funded by shareholders that trade in diversity holdings and is professionally managed. So it's not that you can just buy stock. Anybody out there that got a 401 plan or a 403b plan, they're diversified. That means you probably got stocks, options, mutual funds, things of that nature. But we're going to try to keep this as basic as possible, because this is the basics of saving and investing. So what is a stock? The stock of a corporation is constituted of the equity stocks of its owners. A single share of stock represents fractional ownership of the corporation in proportion to the total number of shares. So that's why in business you'll hear like a lot of businesses that when they offer it, they'll keep, let's just say, out of 100, they'll keep 51, so they can't be bought out. Somebody can't go in and just buy out and then you own the company and you don't know what they're talking about. So that's the thing. It was a conversation going on about the Black Panther in Disney stock. So with the 3 shares that I have, I own 3 shares of Disney. So am I getting paid from the Black Panther movie? Technically, yeah. You know what I mean? I am getting paid for it, because once that stock goes up, and let's just say I sell those stocks, they have paid me. You know what I mean? They have paid me. So when you buy stocks, you own a piece of that company. It might not be a big piece. So again, the rule of thumb is to buy things that you're interested in, things that things that you pay attention to every day, like the type of laundry detergent you buy, the type of phones you have. I have a shitload of Samsung stock, because I'm a techie. So I've had the virtual reality glasses, the tablets, the phones, and all that other stuff. So why not buy Samsung stock? Like toothpaste and things like that. Invest in those companies because you pay attention to those things. So when they got a new flavor coming out, you know what I mean? If they got a new flavor come out, you own it, and it's going to be a big hit. You're in tune to what that company is doing. And even so, if they make a bad decision, you can kind of jump off board at that point and sell those stocks and cash out whatever you cash out. So I just gave you what mutual fund is. I just gave you what a stock is. Okay, so, and I just gave you what a stock is. So another question that I got asked, what is investing? So it was broken down to me this way, because anybody who know me, I did real estate a few years, and I had this older gentleman as my mentor. And, he was giving me information. So he broke down investing in this way. Investing is making priorities for your money. It's making priorities for your money. And let me tell you a story. Like I had a former friend who would sit around in front of the computer and pretty much plan their paychecks out. And it was, they were doing, like kind of window shopping online, and, oh, those shoes is hot. This jacket is hot. Never mentioning whether or not they was going to pay their rent. Never mentioning whether they was going to pay their bills. They were just planning their paycheck. And it frustrated me. I'm just like, hold up, you in debt. You constantly borrowing money from me, but you sitting here planning out your paycheck. And we all know it's tax time, and people are going to do some goofy shit with their money right about now and never even think about planning for the future. They start telling themselves, oh, I owe it. I worked hard all year. Well, the reality of it is, if you're getting money back during tax time, they've been incorrectly taxing you all year. So you could have had more money in your paycheck had, there's different tools. They have like the W-2 calculator and all this other stuff about how many exemptions you have and may not have. You might I get money back because I itemize, because I have a business. I have my tech company, and then I have my company where I speak and write books and things like that. And I write all of that stuff. I write everything off. But if you are getting money back at tax time, they've been incorrectly taxing you and they owe you. That's why on the opposite end, you get noticed like, you owe us money because we've been incorrectly taxing you and we caught it, and you didn't caught it. Cause we like to get these big checks, especially for us making six figures, things of that nature. We get a nice piece of money, come tax time. There's a myriad of ways that you can, finagle getting a lot of money back. But again, it was crazy because this friend of mine would, again, window shop online and pretty much plan a paycheck, and really a horrible steward over their money, mismanaged their money. And the bottom line is, this friend of mine ended up moving to the projects, had a really nice luxury apartment, thought they was going to manage their partner's money, and end up moving to the projects. You know what I mean? End up moving to projects. And it just confused the shit out of me on how you would be able to do that, especially as a man. You know what I mean? Especially as a man, you're supposed to be the provider, and it's not easy. And investing and saving, I mean, if you saving is not going to make you rich. And we get so in tune with, everybody says, oh, you got to have, multiple streams of income. That's true. That's true. But if you have a 9-to-5 job, or you've creating all of these different opportunities for yourself, you might have a 9-to-5 job. You might have a multi-level marketing thing that you might be doing. You might own some business. These are all businesses that you have to run. If you're not lucky enough to have people, looking after these businesses for you, why not have your money working for you? Now, there's a risk involved. There's a risk involved, especially with stocks. Like, like the simplest thing I could tell somebody to do, take your tax money and put it in a CD in the bank. A CD is a certificate deposit, and it matures, and they have 3, 6, 9, 12 months, 5-year certificate deposits, and it earns interest for you. But a lot of people don't even know what the banking system is. They don't know what banks are for. So let me break down what a bank is for. So a lot of people don't know the banking system. Banking, that money that you deposit into the bank, you're loaning the bank money. So it's crazy that they give you fees for everything. They charging you for everything because they bank on your money. They bank on you keeping that balance. That's why they say there is a minimum balance. If you don't have this minimum balance, we are going to penalize you, because they're banking on the money. So they invest into businesses and corporations and sponsorships. So every time you go to events, or, you go to events and you see, let's just say, the Chase logo, that's something that they've invested in. That's something that they've invested in. When they start putting their name on stadiums and stuff like that, that's business ventures for them. So you're loaning them your money and they're paying you crappy interest. You know what I mean? It's something like 0.05 or something. If it's 2 zeros in front of those numbers, you really getting fraction of a cent on your money returned to you. But you are loaning the bank your money so they can go ahead and invest in other things like that. And a lot of people don't know it. They think that, oh, they're just charging you to keep your money safe. No, you can put your money in the mattress. They're not giving you crap on interest anyway. You know what I mean? So you buy a $200 safe, affix it to the floor and stash your money in there, or go old school, put it in a shoebox. That's how I was. So it just made more sense to make my money work for me because, again, I hustle, I grind. You know what I mean? So, you know, but I'm only one person. I can't work multiple jobs. I've had a skateboard shop. I've had a property management company and all this other stuff that I could not run myself. You know what I mean? So when I got hip to letting my money work for me, that's what I do. Okay. Back to the next question. Okay. What is investing? Investing is about, again, working smarter, not harder. And then the third thing is investing is a way to set money aside while you're busy with life and having money work for you, like I just talked about. So that was the question that I got for what is investing. Let me scroll down to the next question. Okay, so if y'all got a pen or paper or whatever the case is, these are some basic tenets of saving your money, because I'm a contractor. So either I contract myself or I contract my business out to these companies to do tech work. And that's a volatile place because you can get a contract and they say the contract is for 6 months. You work a month, they can get rid of you. You know what I mean? Something changed, a business need change, or, you know what I mean? Something like that, and they'll get rid of you. So when that happens, are you prepared for that to happen? You know what I mean? Are you prepared to, like, you know, do you have to scramble and go get a new job as, you know, rent coming up that next month? You ain't got jack saved. So now you're banking on, unemployment insurance or, you know what I mean? Whatever that is for you. But, for a short-term plan, and everybody who's asking questions, I'll read them. In a minute. I just got to get through it because I'm sipping a little bit. This is cognac and ginger ale. So, you know, it got me a little glossy out here. So give me a second. So, short-term goals, you want to have at least 3 to 6 months worth of your monthly income. So when you assess how much, like, this is after the taxes. So this is your net, not your gross. So after taxes come out, whatever that amount is, you want to have 3 to 6 months worth of that stored somewhere. And while it's being stored, you can just put it in a savings account. You can put it in a mutual fund. You can put it in a certificate deposit. So it'll earn interest for you, because you might not never need it. You might be one of them individuals that have the same job for 13, 14, 50 years. And that's going to be hell of an interest for you. So on long term, you want to have at least 6 months to a year of your monthly income coming out. And of course, this is for individuals that are living within or below their means. This is not somebody who's struggling to make ends meet, you know, paycheck to paycheck. You do not want to, it's not going to work for you. If you're living paycheck to paycheck, there's two things happening. You're living above your means, or you're not working under your worth, what you're worth. You know what I mean? You might have some job, or you just took some job for the sake of having some money in and really not, you know, pushing for, you know, what you're worth working for. Okay. So, and then you always want to invest. Like, let's just say if you have a job and they offer 401k, always go with 401k. 401k and 403b are retirement plans. And then there's also a Roth IRA. And IRA stands for individual retirement account. I'm not sure if IRA was actually earning me money at one point. I can't recall if it was earning me money or not. But 401k is for, you know, companies that offer it. And then 403b is for, like, certain employees for the school system. It might be like, tax exempt organizations and churches. If you work for a well-known church, you're probably getting a 403B. That's the retirement plan for them. The 401k is for corporate America, Fortune 100, 500, and Fortune 1000 companies, stuff like that, or whatever. So yeah, that was the question. And then as far as bank products, the only thing that I know about bank products is certificate deposits. They offer mutual funds, or they might be mutual fund plans, things of that nature. You have to check with your bank to see what they offer. To see what they offer. And then the next question I got is I'm gonna just share some quick definitions with you. What is a stock? When you buy shares of a company stock, you own a piece of that company. That's what I was saying about the Black Panther movie and Disney and Samsung. And the thing is, it makes you feel big. So when you start buying stock, you start getting invited to the investors meetings. So you buy stock, and then all of a sudden you'll get these fancy letters that show up in your mail letting you know that they're making a decision about the company, and you are invited. You are a stockholder. So you could go in there as plain Jane as you are, and you could go sit in on those meetings, and you have a vote because you essentially own a part of that company. So whatever you invest in, that's you own a part of that company. So bonds. Okay, so a bond is a loan an investor makes to an organization in exchange for interest payments or a specified term plus repayment of the principal at the maturity date. You know what I mean? So as far as a certain amount of time that you make it a loan. A bond is a loan an investor makes. So you are the investor. So when you get bond, you're bonding for whatever that bond is. There's thousands of bonds that you can go to, and a lot of so in a little bit, I'm going to give you a list of these companies, these apps that you can start researching to invest. I use E-Trade because it's easy for me. E-Trade, it gives you videos and classes that you can attend. They're always inviting. Matter of fact, they're having something March 1st or March 10th. They're always educating you. And then again, you could go in and sit down and talk. It's not a physical bank, so I can't go in there and deposit money. You have to wire money in. So I have direct deposit going into my E-Trade account. So that's one of the things that you can invest in. Okay, so the next one is investment fund. Investment funds such as a mutual fund, closed-end fund, and exchange trade funds pool money from many investors and invest it in according to an investment strategy. So I don't know if anybody's on here from last year when I started that in investment club, it failed because people were afraid to give up $10 a month. $10 a month. Now you wouldn't smoke $10. I just ate $10 in dinner. You know what I mean? Because I didn't want to cook. You know what I mean? So I had an investment club. So that's what an investment fund is. You know what I mean? So there's multiple investors. So everybody who's watching this, if we got together and decided to, get somebody to oversee us investing our money into whatever, that's what an investment fund. Okay, so an annuity, this is a big one too, because they get a lot of people with this one. So an annuity is a contract between you and an insurance company in which the company promises to make periodic payments, either starting immediately, called an immediate annuity, or at some future time, a deferred annuity. So I'm pretty sure a lot of you guys can recall one of these commercials that say, hey, you got into an accident or you got an annuity, call us now. We can get your money right now. So what they do is they give you a loan, then they make an arrangement with wherever you are getting that annuity from and say, hey, listen, we just cut him a check, so just start paying us. If y'all can recall that. Yeah. So that's what an annuity is. And then in options is a little complicated. I have it down here because somebody asked me what is trading options. Options are contracts that give the purchaser the right but not the obligation to buy or sell a security, such as a stock or exchange traded fund, at a fixed price within a specific period of time. I really won't go into that because it'll confuse a lot of people, because I'm damn near confused as well. Yeah, exactly. I have an annuity and I need cash now. Yeah, that's one of the commercials that they have. Okay, so so let me give you the apps that you can go on to do your research to see what's comfortable for you. They have apps that, again, that take little to no money. You have to attach it to your account or whatever the case is, so you can easily put money into it, and then you can start buying stocks or whatever the case is. So there's Acorn. That one is probably one of the most recent ones that come out. There's the Robinhood app that's out that you can use to start using money, and then some of the other ones that are like less known, there's Stock Market Simulator, Sig Fig, Motif Explorer, Yahoo Finance, and then the old ones like TD Ameritrade, Fidelity Investments, Scottrade, and then E-Trade, the one I use. I looked into Scottrade before, but not heavily. I just know E-Trade pissed me off, and then I was just like, I'm out of here, and I'll start looking at Scottrade, but it's basically the same thing. These accounts, they cost you $100 or so to open up. So again, if you need something to do with your tax money, again, you can, outside of buying getting you a life insurance policy that may cost you under $40 to start. You can go ahead and put money into one of these accounts that starts to earn you money. Go get you an IRA to save, start a retirement plan, and then have direct deposit going into there. Just whatever you can afford. You don't want to be one of these individuals that think like, okay, well, I'm grinding so hard that I'm going to be rich, and then I'll start saving or start investing once I'm rich, once I get this money, because I need all my money now. I used to think like that. And you chasing a unicorn with that one. It doesn't take you much. Again, just rambling off. There's tons of companies on here. $45, $14.62, $33 per share. So if you wanted to throw away $100 on something that you believe in, you can go on. You could Google like what's the current stock price of Facebook, what's the current stock price of Johnson & Johnson, and it'll come up in a Google search, or it'll point you to the website that has that information. So it doesn't take much for you to begin to save your money or have your money work for you. And it's not just stocks. You want to look into options, you want to look into annuities, you want to look into all of that stuff. I mean, again, I don't know, I'm not a guru about it, but I know when I lost a contract and I needed to keep having money come in, I sat down with E-Trade and I said, because I was doing dividend reinvestment. So every time my investments earned me a dividend, I just bought more stock. So what I did is had them stop that, and it was giving me $245 a week to help me get over. You know what I mean? To help me get over. And then it was crazy because a few years ago, unfortunately, my goddaughter took her own life. So I went out there for the funeral, and then I had a realtor friend that lived out there, and myself and three other individuals got together and purchased a building that was being taken due to taxes. So it was like $3,000 for between all of us. $3,000 from me, $3,000 from the others. And then we turned around before we could even start fixing it up. The guy had got his tax situation together and bought it for more money. Then we actually paid. We paid $12,000 for it. And I think he paid us. We split like $57,000. But I know I lived off that money. I was a full-time entrepreneur at that point, so that it came right on time. So definitely save and invest in your money will assist you. And again, it didn't happen overnight. I still learn. So every free minute that I get, I go on the website and I read or I listen to those videos, or I do research on the company. Again, I'm doing research on a lot of companies that are doing medical marijuana. You know what I mean? So I started to invest in medical marijuana. So I hope that helped you. and I'm trying to get back to where's Facebook at, so I can answer you guys' questions. Hold on. I think I might have turned it off by accident. This is the first live I've done, so if I can't get back to that question, I don't know where it is. So do me let me just refresh it. Give me a second. Let me just refresh it to see what happens, because I can't find those questions. Oh, here they go. Okay, hold on. What about investing in coins, crypto? I think that is the name. So Bitcoin and cryptocurrency, I don't know much about. I know I jumped on that bandwagon late, and I think I opened up an account and put $40 in it, but I don't remember who I opened up the account with. So I'm just waiting for an email to come through to have them, ask me to change my password or some type of notification. I tried to jump on it. But cryptocurrency actually been out for a long time. I think there was a movie that came out, and I want to say it might have been Fresh. That movie, I can't think, but it was a little dude with the high top, and at the end they had all of this cryptocurrency, and they used it to get dudes jammed up. But it was like an online, like it come out of the dark web. It's just like hackers and stuff was initially trading cryptocurrency, Bitcoin and stuff like that, because it wasn't something tangible that they had. But now I'm hearing that there's a lot of nonsense going on with it. Okay, yeah, his Bitcoin trade something that don't exist. Okay, so all right, let me refresh this again to see if I can get to the other questions. Okay, I don't see them no more. Okay, so I'm trying to see the rest of these questions. When I refreshed it the last time, they came up, but now they don't. Yeah, that sucks. Okay, so what I'll do is I'll go ahead and try to look through it once I'm done, and then I'll respond to your questions, I guess, on the site, because I can't see it because I'm using my phone here and I'm pulling it up on my laptop here. So I'll try to answer everybody's questions. And if you have another question, like we can do another one, I can do another one of these to get more in depth. So if you have questions, let me know. All right. So yeah, that's it. I hope y'all learned something. I hope y'all enjoyed it. I'm sweating. I don't know what, because I turned the AC off because I didn't want it humming in the background. But yeah.